Good morning, everyone. This is Marshall Gidler bringing you the morning comment for March 20th. Well, Norway kept rates unchanged yesterday, contrary to widespread expectations. Governor Olsen sounded much like Bank of Canada's Governor Polo's when he said that the bank had cut rates in December as a hedge against economic weakness, but that weakness, quote, has not come through so far, unquote. So they could wait and see now. Although Olsen held out the promise of rate cuts in the future, the Norwegian krone could continue to be an outperformer if the economy holds up better than expected. NOK should be able to outperform euro, if not the dollar. Meanwhile, the Swiss National Bank sounded like the RBA and RBNZ as it complained that, quote, the Swiss franc is significantly overvalued and should continue to weaken over time, unquote. They're certainly right that it's overvalued, but it's been overvalued since 1987, so don't hold your breath waiting for a big change. The Swiss National Bank said it would, quote, remain active in the foreign exchange market as necessary in order to influence monetary conditions. Nonetheless, it substantially lowered its forecast for inflation, meaning even they aren't willing to bet on their own success. I think dollar Swissy remains a buy, but that's only because of the strong dollar. Euro Swiss will struggle to stay steady and more likely will drift lower, in my view. Now, sterling was the big loser yesterday after a speech by Bank of England chief economist Andrew Haldane. He thinks the chances of a rate rise or cut are broadly evenly balanced. This is in contrast to the assumed stance of the Monetary Policy Committee, which is supposed to be debating the timing for a rate hike. Now, Haldane is just one member of the MPC, and his comments contradict those of Governor Carney. Nonetheless, as chief economist, Haldane's words do carry weight. Now, reopening this debate on top of the political uncertainty that the pound currently faces makes for a difficult background for sterling. I'm now bearish on the currency all around. Today's highlights, it's back to worrying about Greece. During the European Day, investors will probably shift their focus back to Greece as the country has a lot of payments due today, including payments on one of the infamous Goldman Sachs swaps that disguised Greece's fiscal position so it could qualify for Euro membership. To make matters worse, comments by Eurogroup President Dijsselbloem about Greece possibly imposing capital controls have spurred more withdrawals from the bank. Greek Prime Minister Tsipras meets with German Chancellor Merkel on Monday. We'll see if they can kiss and make up, or whether the exchange of views just makes things worse. As for the indicators, the Eurozone's current account for January is coming out today. In Canada, CPI inflation for February is expected to fall below the bank's lower boundary of 1% to 3% target range, adding to pressure on the Bank of Canada to loosen further. Along with the low oil prices, this is likely to keep the Canadian dollar under selling pressure. Atlanta Fed President Lockhart and Chicago Fed President Evans speak. It'll be interesting to hear their takes on the FOM decision. Finally, don't miss the eclipse today. So, for more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Gidler, head of Global FX Strategy at IronFX Global, wishing you solid trading.